Facebook Ohio Investors Facebook group page. We're going live again. It's Wednesday. So, our topic today is, has it been too competitive and to get into the real estate market? Not only with residential, but with investment properties. And what are we seeing out there? Guys, as buyer's agents, over this last year, what are some of the things you've been experiencing?
Well, I'll
Anybody?
say right off the bat, if you're buying single family homes, up until just recently, you've been in a very competitive market. If you're buying multifamily homes, you're still in a competitive market. However, you're not dealing as much with the people that fall in love with the property. You're dealing with people that are making a business decision in most cases.
So what
So
you're
it's
saying,
been
what you're saying on the residential side, if I'm buying a single family residence, it could be for investment, but I'm competing with emotional type buyers.
you're competing with people that are thinking we're going to have our Christmas in this house, or I can't wait to raise my family here, and that sort of thing. So they're going to pay more for the house. Now that's changing a little bit. The market, we do feel a cool off. It's not a cold, but you do feel the less multiple offers than you got for. So in the single family market, you were before dealing with people that were just shooting out at anything they could get, trying to get because the inventory was so low.
Right.
In the multifamily, you still had a lower inventory, but it wasn't as bad, and you weren't dealing with as many people that were going to live in the property.
What I've seen with working with like investors over the last few months of 2022 is with the rise in the interest rates though, sellers are still trying to get that like premium like on selling the property, but because you're making a business decision on the property, you're not emotional in it like a single family home. It's getting harder and harder to like find those that it's worth making that transaction on with the rise in interest rates, and sellers still trying to get that premium on the sales price.
Yeah, what I find is you look at how people invest. If you invest in the stock market, news that happened 5 minutes ago is out to the public 3 minutes ago, and we're all making decisions immediately. But with real estate, when you're dealing with either single family or multifamily, we're usually what, like 120 days behind. So news that's happening today doesn't really affect us until about 120 days from now. To really swing the market, where we see that much greater in the stock market and short-term exchanges and things like that. So when we look at it from that perspective, we've had these last few years where we've had an overabundance of equity. What was happening to the loan officers out there in the world? What were they getting their most business from?
They disappeared. They disappeared.
But
They're
what
too
were they
busy doing
doing? What were they doing before now when interest
finances.
refinances? Yeah. So
yeah.
and the reason for that is there was plenty of equity. I could use that equity to fix up my own house. I could use that equity to consolidate debt, or better yet, what we were seeing a lot of our people that are calling from out of state. They lived in states that their equity really got driven up high. They might have all of a sudden overnight had two, three, $400,000 in equity that they decided, hey, maybe I shouldn't just let that sit in my house. Maybe I should take that out and invest it elsewhere so that I'm making money with my money, which was a great decision, especially when they were
Right.
borrowing money
Yeah.
at 2.5, 2.75%. Now, that's on the refinance side. On the buy side, it was a little different, especially in the residential world, because we had these interest rates. I think at some point, I mean, rates got down to 2.25. I heard a couple of people get, but let's even say 2.5. How much of the purchases that happened back then were falling to people that were trying to buy those houses? I mean, it was hard because as a buyer's agent, you'd go out and show houses, but there was no guarantee that you were going to win, unfortunately, even at 2.5% interest rate, because everybody was trying to get in on that. So
There was no guarantee you were going to be able to show it before it was sold.
for sure. for sure. So the 2.5% interest rates, although they were good, they were not a consistent reality that we could get moving forward. It was going to be something that changed. But we had this equity position that people were able to take out and buy new houses with. So now what we're seeing is that equity is somewhat, it's not necessarily dried up. The equity hasn't gone away, but it's much more expensive to borrow that on that equity. So where we were borrowing at 2.5% back in the day, a year ago, what's interest rates now today on a 30-year conventional purchase? Anybody?
5.9.
Yeah, 5.99.
Man, on an investor deal, I saw a conventional purchase that's at 7% today, as of today. So the ability to borrow that money and purchase elsewhere has changed drastically. What are we seeing, Cheech? I know you pulled up some information prior to this call. What are we seeing with inventory levels and where those are headed with both residential and multifamily?
I only pulled up multifamilies.
Okay.
And now, granted, I track single families every week. But what the information I pulled for today was just multifamily, so I'll bring that up real quick.
Well, you're pulling it up. I think one of the big things that people need to understand it from an investment standpoint is it was so hard to get into the single family world in the last year and a half. That is now lightening up because we're not dealing with so much emotional purchases. Our multiple offers are dwindling. We're not sitting in a highest and best type world anymore. Because that was, how easy was it to be a real estate agent? If you had a listing, you just sat back in your chair and watched it roll in. And all you had to do is every time you saw an offer come in, is send out that email. You're in the highest and best offer situation because I have multiple offers. And they would just keep coming in and your price would continue to go up. We're not seeing that as much anymore. Where we were seeing 20, 30 offers, now we're only seeing maybe 4 or 5, if that. Some properties, the sellers are so greedy, we're not even getting multiple offers. That will slowly change over the 120-day cycle that we were just talking about earlier. But what do you have here as far as your numbers?
And we're going through our natural cycle too, which is fall is a good time for real estate. Come November, though, we start seeing that slow down too. So
absolutely.
So here you go. I went back to 2000. I went back 4 years. So you can see 18 and 19, we had a ton of inventory in multifamilies. You guys see that there. Sales were, again, this is our normal. We're busy in the spring. We slow down again at late fall, winter, and then we start getting busy again. And you can see it happening. Now you see our inventory has leveled off. In 2020, our inventory started leveling off. We had a big bump in July for whatever reason in multifamily inventory. The red line is what's going under contract. So if you look like current versus same 4 months 4 years ago, you're looking we're our for sale down 42%. If you're looking from this year versus last year, our inventory is up 9%. So it just depends.
So as the inventory is
more of a full market though right now, what's going on is getting sold.
So as our inventories continue to go up, what's going to happen? Throw that.
Just like single families, it's going to slow down the number of buyers and how much they can buy. Inventory will come into line. In other words, people will price it based on where it's going to sell. Especially when you're selling a multifamily, if it's a true investment property, there's multifamilies that are good for a first-time buyer, and there's multifamilies that are true investment properties. And if it is a true investment property, it's got to make financial sense for an investor to buy that property. If property's rented out for X dollar amount, when I'm listing a multifamily, I'm talking to the seller about here's pretty much where you're priced at based on what kind of returns people are going to get when they buy this property.
Right. So one of the things that we all hear constantly is buy low, sell high. So when all of the fish are swimming upstream and you're going with them, it's easy to follow that path. But sometimes when you're swimming the opposite direction, is really where the tournament down in Columbus, Ohio. And at this particular, I bought tickets to go to this NCAA tournament. They were legit, and I knew what game I was supposed to go to. And there's two games throughout the two sets of games throughout the day, and there's morning session and afternoon session. I didn't look at my ticket correctly, and I thought I could get into either. And my tickets were for morning session, and I had waited in this huge line. I got my kids with me, my brother-in-law and stuff, and we're waiting in this line. And I get to the ticket counter, and they scan my ticket, and it buzzes, and I'm like, What's wrong?" And I swore, I was like, "They're valid, I promise you." And what had happened is they were for the morning session. So I had to turn around and swim upstream through these thousands and thousands of people to get out of there, towing behind me my kids, my brother in law, and his kids. And when we got out to the parking lot, there was a deal. That's where the deal really happened. I started looking around at scalpers and stuff, trying to find a way to get back into this game. And this little old lady walked up to me and said, "Do you guys need tickets?" And I said, "Yeah." And she said, "Hey, I got these tickets." I paid her, I don't know, maybe $100 for them because buy low, sell high. On accident, we were able to get floor seats to that same tournament game. And that's what the investors coming into this market right now have to look at. It's not like it was a year ago where everybody's trying to get investments because there's a ton of equity and it's easy to do. Now it's going to get a little bit harder, but that's where the deals are truly buried in this market. Would you agree?
Yeah, I just posted one today that's a home run.
So when we're looking for deals in this market, or even if we bought last year, as the market changes, how does that affect rentals?
You know, and keeping that in mind, what you're talking about, rates are higher, right? Everybody agree with that?
Yeah.
Yep.
They're paying more. Okay, what happens when rates go down in 2 years?
Prices
We
down.
can't. More money on that property. That's the bottom line. And if rates go up, if rates continue to go up, how does that affect your fixed rate loan?
Doesn't.
It doesn't. And what happens to rents? They still go up, don't they? So if it makes sense today, if it makes financial sense today, it's a win-win in the future, no matter what. You know, and Gary Keller said it best, and I talked to somebody about this today. She said, "Well, if I sell it in 2 years, I'm not gonna, I'm gonna take a loss." And well, you don't have to choose to sell in 2 years. You could. This is an owner occupied. I said you could choose to rent it. That's a great rental property. If you move out of it, keep it. Keep it until it makes sense to sell. Sell it at the right time.
Right. What usually happens is those same people that are trying to buy in an up market are also trying to sell in a down market. And somewhere along the way, you got to break that cycle. And the easy way to break the cycle is just to simply understand when the times get tougher, people are still renting. And they're usually renting at a higher rate than what they are today. I mean, what does inflation do to rents? Makes it go up, right? Are our taxes going to increase on all of our property? We interviewed the Medina County auditor and posted it here on the live video not too long ago. And one of the things that he brought up, but there was a state mandatory properties this last year, and many of you, if you've checked your mail recently, you've got a letter from the auditor saying your property taxes are going up. Well, when property taxes are going up and rents are going up, I mean, we're just there's nowhere for rents to go but up. You've got to, as a landlord, look and say, okay, I'm paying more taxes, so I got to charge more in rents. I want to make more money, so I got to charge more in rents. It's really interesting when you look outside of our normal spectrum of how we find rental comparisons. We often go into the MLS or we'll go on Bigger Pockets and things like that. But I'd encourage you guys, there's I don't want to say a name here on Facebook, but there's a local company that is building ranch style apartment living, and they're popping up all over Northeast Ohio and probably other states as well.
More than just Northeast Ohio, yeah.
Yeah, absolutely. But if you go to their website and you pull up their floor plans, just below their floor plans are their rental rates. Guys, I'm telling you, for a little 2-bedroom floor plan, on a ranch style floor plan on a slab, I'm seeing 2020.
And they
It's
would
possible.
keep building these if they weren't getting the rents.
No, no, absolutely not. And a lot of times when our investors call, they're looking for the cheapest possible property and in a downtown area where we know when things change and the market changes, whose income is impacted first,
Yeah.
the A property or the D property. It's probably going to be the D property because those incomes seem to go away first. So when people are trying to buy in that D C category, when they could be buying an A B property category, maybe they can afford a little bit less, but I shouldn't say less. They're buying a whole lot more, but maybe they can't buy
A
2 or
little
3
less
properties. Maybe they can't buy 2 or 3 properties, they can only buy one. It's still a better investment because as the market changes, rents are going to go up, but it's not going to affect you as much because those people still continue to have good incomes.
And you may start off with lower ROIs than if you took something in the inner city that looks like a lower ROI. Not necessarily a lower ROI, it just looks it. However, you have stable tenants that stay there and rent just keep going up versus
And as these
not if you're in this for
that's the key to it. So if for some to sell in a different market where interest rates have gone up, what are some of the things that we can do and how important does it become to understand creative financing and be on a real estate team that has had some people that have been doing this for a long time and understand there's different ways to look at deals. One of the things with creative financing is looking at it and saying, hey, you bought that property and when you bought it, your interest rate was at 3%. We're dealing with a 10% interest rate market now when you're going to sell. How could we leverage that?
Seller financing.
There you go. I mean, there's a ton of options that don't fall into the bag of tricks that we've used over the last 2 or 3 years. It's all been cookie cutter stuff. We're going to see a big swing in this market. And I don't think we're going to see a crash or anything like that, but we are going to see where it's not as easy to do the business. So we're going to see a big swing in the amount of real estate of realtors, period, that are doing this business because it's not as easy as it once was. And I personally look at this like being a buyer's agent now is where it gets exciting. It stunk to be a buyer's agent over the last 2 years because you might have had a willing to put an unrealistic offer. You want and you're going to really get outside of that normal box that we've been playing.
speaking creative financing, Blaze, and it just made me think of this. I see more and more, and I don't know if you guys see them too. And see, I'm talking single family owner occupied, but I'm seeing where the seller's offering or the lender's offering 2-1-0 buy downs. And I don't know if you guys are familiar with how those work. I know Blaze is, he was in the business. But more lenders are pushing it. But on an investment property, does it make sense to do something like that? You're starting at a lower payment. We're still talking a fixed rate loan. You're starting at a lower payment that's going to adjust for the next 2 years, but you know exactly where it's adjusting to. What's going on with rents every year?
They're going up.
Yeah. So you could turn around on a 2-1-0. I'm going to look into this a little bit more. It might not be a bad move.
Yeah.
And can you explain that just for those of us that aren't familiar with it?
Basically, it works like this. Let's say the interest rate is 7% on a conventional loan right now, conventional non-owner occupied loan. All right, and you either use a seller-funded buy down or a lender-funded buy down. So let's just say a seller-funded buy down. The seller pays. And just to make it real simple, let's say at 7% your payment's $600, and at 5% your payment is $500, so $100 different. So that seller funds that $1,200 difference. So the lender still gets 7% from day one. Your loan's still getting amortized like 7%, but your payment's based on 5%. And I made those numbers up, but that's how it works. And then the next year it goes to 6%. So now that seller's funding that extra $600. So the seller pays $1,800 to give you a 2-1 buy down. And in some cases, the lender will do it. They'll instead of a 7%, they'll give you 7.25%, and they'll pay the funding. So it could be a good move that you can make even more cash flow right off the bat. And as rents go up, your cash flow continues. I'll have to look at that more and see how that affects some of our office.
Yeah, I actually put a call out to one of our lenders last week with those very questions is, hey, how can we leverage some buy downs in this market as interest rates are going up to get the sellers to pay? Because what we just talked about, we're going to hit that 120-day cycle where sellers are going to start to realize my greed isn't paying off. If I really want to sell this property, I got to do something about that. And you could simply lower the price, but is lowering the price going to have the same impact for that investor that prepaying
not in the monthly payment? Yeah.
Right.
In the monthly payment, it costs the seller less money to do a buy down than it does to lower the price of the property.
And probably increases the cash flow for the buyer substantially in that first year where it makes it more worth it. We've seen our charts where over 5 years, your numbers continue to go up and you really make a good profit after 4 or 5 years if you systematically raise rents. By knowing that first year is one of the problematic years and using a buy down, that could be interesting. So let's dive into that topic more in the future. Maybe we'll get a loan officer on here that's really good at explaining that and share some screens and stuff and show what that's all about. But interesting enough, I just got a text from one of our lenders that talked about our conventional loan limits and FHA loan limits are going up. So
and FHA too.
Yeah, so conventional loan limits are going to be increased to $647,000 and approximately 715 from 647 to 715 in November, and FHA is being talked about going up to 465. I remember not too long ago, or maybe I just been in the business so long that our loan limits were in the 200s. So with inflation,
when I got into it, FHA loan limits were $67,500. I'm not saying I'm old or anything.
And you could buy a loaf of bread with a wooden nickel.
Yeah, right. But you think about it though, in the last year, FHA has not been a viable option for a lot of people because when there's multiple offers, they're going to take what the seller considers the best financing option, which FHA is not a bad financing option. It's not. That doesn't help us out with investment properties. However, that's fantastic. If you could buy a $400,000 house with an FHA loan in this market, that's 3.5% down. Sellers can pay the closing costs.
what that type of text or email indicates to me as we're just going to see continual price increases with inflation and everything else. So buying in this market is still a very good option, even with the higher interest rates, because you can get higher rents. And then when you go to sell, if you hold long enough, you're going to see those returns on appreciation as well. So guys, I'm going to go ahead and call it quits on the live. I think this was a great discussion for today, and we'll do this again next week.